On behalf of Crosscheck Media and Biz Talk Today TV, welcome everyone to the Money Path. I am your host, Todd Schoenberger. Joining me today is Adam Patti. He is the CEO of VistaShares. He's joining me out of Boston, Massachusetts. Adam, welcome back to the program. I want to talk really, you're on quite often on the show and you have some sensational ETFs, and we're going to talk a little bit about them. But clearly the theme today is going to be about AI and the AI supercycle. In your opinion, because it's been such a big driver of the current bull market, do you feel that we are still in the early stages, or are we perhaps maybe in the middle of this ball game right now?
Well, happy Monday. Thanks for having me on. Look, we firmly believe we're very early. And we would still say we're in the first inning. And that is backed up by data. You look at the CapEx expenditures that are continually ramping up across the world and recognizing that right now the two, regions that are really spending the most money is the United States and China. Certainly Saudi Arabia has been making inroads into AI infrastructure, but Europe is just really starting. There was a deal announced in the UK today. We have a long way to go because the reality is we need the compute to generate the power or the compute power to make these AI systems as valuable as they need to be for the hyperscalers to earn money from them. And that's the end of the game. So, the hyperscalers are investing in data centers and semiconductors because they need the compute. And why do they need the compute? Again, they need to create, consumer-facing applications that add value, and we're not there yet. We're not even close. And these are multi-year contracts. So when they say they're coming out and spending, $600 billion in 2026, that's for locking up construction capacity and chip capacity and all that over many years. And they are continually ramping it up. It's a global arms race, and the United States needs to win. China believes they need to win, and other regions are getting in the game.
So is that opportunity there? Is that the real reason why VistaShares came out with their artificial intelligence supercycle ETF?
Well, yeah, I mean, we believe that super cycles are long-term disruptive technological trends that change the way people live and work. The underpinning of that is AI. It impacts everything: the electrification super cycle, robotics, biotech, space, defense. Everything is being impacted by the growth of AI. So the global economy in 10 years from now is going to look very different than it does today, and it's going to be largely AI driven.
So on the AI trade, when people talk about AI investing, they immediately start thinking about Nvidia, naturally. But what are the other opportunities that are out there? I mean, for example, what is that supercycle ETF all about?
Yeah, so super cycles, the way we construct it is very different than anyone in the world. And that's why we've, become, top 1% Morningstar. We're the best performing AI ETF in the world. But it's no surprise because we are not buying hype. So yes, Nvidia is an incredible company. They are an important part of the story, but they are not the story. And the reason for that is the way we construct it, we follow the CapEx. So that when we look at AIS or POW, our electrification ETF, what we're doing is we are mapping out the supply chain in great detail to determine what are all the segments that go into building an AI data center, for instance, or a high performance AI semiconductor. What are all the components? What are all the steps? Once we've identified that, then we're overlaying what's called the bill of materials. And this is a patent pending methodology that we have developed, and it's actually right on our website, fully transparent for our investors to review. The bill of materials, what it does is when it's overlaid over the supply chain, you can really determine how important each segment of the supply chain is economically to the build process. So just to give you an example, Nvidia is actually quite a small piece of the total build of an AI data center, which is why it's not such a huge holding in our ETF. People might not realize, and I've mentioned this, I love using this as an example, but a lot of people don't realize that cooling systems are about 25% or more of the total cost of an AI data center. So a company like Vertiv, which many people don't even know about, certainly it's had a good run and people now are more cognizant of it, but that's a very important piece. So it's about identifying where the CapEx is going, who is capturing that CapEx, because chances are if they're capturing the CapEx, they're capturing the profits. And so we're looking to invest in the profit pools, not the hype.
What does the term AI supercycle actually mean from an investment perspective?
Well, what it means is that's a great question also. So if you step back and define super cycles as I did, right? Long-term disruptive technological trends that change the way you work and live. What makes AIS, our AI super cycle ETF different is that right now, the way it's constructed, again, we're following the CapEx, we're following the profit pools. Where are those profit pools? They're in building AI data centers and semiconductors today. Okay. But 3 years from now, 5 years from now, that might change. So the super cycle is more than just the infrastructure, though the infrastructure is what's leading it today. Down the road, it's agentic AI, it's software applications, it's other pieces of the AI story that, quite honestly, in our opinion, are not as important right now. So we're not going to focus on those. But as they become more important, their supply chains are mapped out, their bill of materials are overlaid, and they become part of the story. So we view AIS and POW, our electrification ETF, as fundamental, foundational pieces to your portfolio. These are not just plain thematic ETFs that, look at SIC codes and, load the portfolio up with Nvidia and Amazon and Microsoft. We're looking at the CapEx and we're migrating the portfolio over time. The other differentiator is we are an active ETF, which we believe is very important in these dynamic industries. So while the process I've laid out with the bill of materials and supply chain is the methodology we follow to form the basis of our core portfolio, that change, we run that analysis twice a year. It's the AI, it's the active management that's the secret sauce. So what we do here is, unlike others, again, we tap into the knowledge of operators. So if you look at our investment committee, we've got John McNeil, the former president of Tesla. He's the vice chairman of GM's autonomous vehicle division. Sunny Madra, he runs hardware at Nvidia. Justin Lopas, who runs Base Power, one of the premier energy technology companies in the world, serving, data centers. So these are the people they're the ones building these projects. They're the ones who understand the technologies, the pipelines, what's going on around the world. Their knowledge informs our decisions on our portfolio. So that's a real competitive advantage, I believe.
So, Adam, from a portfolio management point of view, are there any metrics that say you would follow that would tell you that a certain AI stock is overextended?
So valuation is something that we look at from a variety of perspectives. One is just the traditional 40 Act perspectives, right? You have to have diversification rules. You got to make sure you're following those. So that's number one. Number two is we won't necessarily look at the valuation in isolation. What we'll look at is the structural risks and opportunities to a company's business. So for instance, if certain company has run up a lot, we will review that company based on where our operators see in the market. What do their pipeline look like? Has anything changed with their pipeline? Has anything changed with their technology advantage? Is there another competitor that's taking market share away from them because they have a better technology and they're winning RFQs out in the marketplace? That's what informs the valuation for us. We're not going to just say this stock is overvalued because we feel like it is. It's got to have to do with structural risk and opportunity to their business.
So AI isn't just about chips anymore, as you know, it's about infrastructure. So how important are data centers to the investment thesis?
Right now, it's critically important in AIS. So AIS, if you look at our portfolio there, it's there's two supply chains that we're covering off. We're covering off the data center supply chain and the semiconductor supply chain. We believe those are both, that's again where the profits are being generated today. But if you look down the road, or not even down the road, if you look at the other part of the puzzle, so there's really two parts. So everyone's looking for the bottlenecks, right? It's memory, it's this, it's that. AIS covers off the entire, whatever's inside the data center, that's what AIS is covering. The big bottleneck is what's happening outside the data center, the electricity, the transmission and distribution. That is what people are starting to recognize. There's been a lot more talk about it recently, but our belief is that the electrification component of the AI trade is still being overlooked. It's probably 18 months, it's like where where data centers were 18 months ago in terms of people understanding the gravity of the growth curve there. So POW, which is our bookended product. So AIS is everything inside the data center, data centers and chips. Everything outside the data center is all about electrification, and it's about transmission and distribution and getting those electrons from the generation facility to the end consumer.
So, okay, that's your ETF. The symbol in that one is POW. So explain it because this is a fairly new ETF, correct?
We launched it in October, so it's a lot newer. AIS was December 24.
Okay. So now with POW, I would imagine now that's going to be extremely popular because this continues to be a talking point from, like you said, everything outside of the data center, especially now we're in a midterm election year. You're hearing a lot of politicians
Mhm.
talk about these data centers. So what is the next step for POW though? Is it nuclear? Is there some other resource that's out there that we haven't been discussing in mainstream media?
Great question. And that is exactly why we believe POW is such an important portfolio construction tool right now. So when people talk about electricity, everyone says, oh God, nuclear and solar and this and that and the other thing. But actually, that's not even the story. The story is if you look at the CapEx again, remember, we're following the CapEx. POW is the same exact methodology as AIS, supply chain, bill of materials, where the profits are being generated. So if you look at where the CapEx is being deployed, about 15% of CapEx is being deployed into kind of what we'll call alternative generation technologies, nuclear, solar, wind, whatever it may be. Over 50% of the CapEx is going into transmission and distribution. That's where investors need to be looking because that's where the money's going. And why is that happening? The United States, for instance, does not have a energy problem. We have plenty of natural gas. We have plenty of it. What we have is a power problem. We can't turn that energy into power and get it to the consumer because our grid is antiquated. So what does that mean? You want to be looking at transmission distribution technologies and infrastructure. Those are boring things like cabling, it's switching equipment, it's transformers, those things that sit at the top of your poles on your street where you live. There's a 2 to 3 year backlog for transformers. You can't get the transformers. So that is the big opportunity in our estimation. It's the grid, it's the electrification process. And in fact, there was news yesterday. We posted something. The CapEx spend into data centers by the hyperscalers is around, call it 650 billion in 2026. The CapEx spend into the grid is also 650 billion this year. So the spend is actually equal, just nobody's recognized, well, not nobody, but a lot of people still don't recognize and are not jumping on that. If you like the AI infrastructure story, you need to be looking at electrification because, it's very early there.
Part of the whole talk about the SpaceX IPO is that Elon Musk's one of his visions is to have a data center in space powered by solar. I
Mhm.
mean, is realistically, I mean, is this practical? I mean, do you think could you possibly see such a thing in our lifetime?
Well, look, I am not a person that will bet against Elon Musk. I mean, we're electric cars feasible, we're reusable rockets that you can land back in a Jaws. He seems to know what he's doing. Yeah, I mean, the science behind it is we've looked into it. It's very feasible. We talk about it on our investment committee meetings because these, people are involved with those types of projects. So it's very feasible. It's not happening next year, but probably within the next 3 to 5 years, I think it's very feasible, and it's going to really open up the energy trade for greater AI power. Musk said he wants to create, I think it was was it 1 terabyte per month of
Hmm.
new power, new compute power. So I mean, a terabyte is like a city. So I mean, we need to find the energy somewhere.
Yeah, no doubt about it. And so also on the liquefied natural gas, just so the audience knows, can you explain to them a little bit about how that would work from a power by powering these data centers? Because we're so used to the electricity and being on the grid. And the big thing about Oracle's West Texas data center is that they're going to be off the grid, but they're putting up all these windmills everywhere. So
Yeah.
is that the same with, I mean, wouldn't How can an Nvidia chip be powered by natural gas?
So that's yeah. So what's happening is a couple things right there. So first, the grid can't handle the power. So the hyperscalers are trying to figure out different solutions. So this whole concept of putting the power generation behind the meter, meaning it's not on the grid, it's their own private generation facility. And if they have excess power, then they will put it back to the grid, bringing consumer prices down, which is a nice strategy. So look, electricity is developed from other sources, right? It's natural gas, it's coal, whatever it may be. You need those inputs to actually create the electricity. So so natural gas is just one way to do it, and we have plenty of it. So the big problem there is that to create the power generation facility that takes the natural gas and creates, the electricity from it, you need turbines. And there's one major supplier of turbines in the world. It's GE Vernova. And they have a 2 to 3 year backlog for turbines. So again, it's just the backlogs and the bottlenecks are so significant. So that's creating pricing power from all these companies, increasing their margins. Again, go where the profit pools are. So GE Vernova is ramping up their capacity and building out more turbines, but they can't keep up. So it's a major bottleneck, and people are looking at other types of technologies to try to get around these things. But right now, it's an industrial, boring business. A lot of these companies in the PAL portfolio are companies you definitely never heard of. Some of them are in Italy, and they're all over the world that are just creating these little, the undersea cabling technologies and cables to transmit. So it's an interesting business, and it's something that people really need to look at if you're interested in the AI trade.
So I've never heard this before. You're telling me that there's only one company that can create these turbines?
Well, one major player. There's others that do it, but they're the leader and have a massive market share and have the best technology. So yeah, and their backlog is huge, which is why GEV has gone parabolic over the last year. We of course have had GEV in our portfolio, both portfolios. It's one of only two overlap securities between POW and AIS, but we put GEV in way before anyone was talking about it, over a year ago, because Sonny Madra on our investment committee was talking about how they're building out all these data centers and we can't get the power, and the backlog is the turbines.
That's incredible. And so when Sonny went through that analysis, I mean, clearly he saw the opportunity there. I mean, that's genius.
Mhm.
So, I mean, does he have any other ideas for the rest of the year?
Well, yeah, just keep an eye on our portfolios. You'll see what we put in and out. But I'll just give you another example. Corning. See
Okay.
what's going on with Corning today? Corning is up. I don't know if it's still up 10% because they just signed another major multi-billion-dollar deal with Amazon. Now it's Meta, Amazon, and what was it? I think Microsoft. They are the leader in fiber optic cable. Fiber optic cable. You need 10x the fiber optic cable for an AI data center versus a regular data center. So, everyone's on the Corning train over the last few months. We've had Corning in our AIS portfolio since January 25. So, I mean, that's the type of insights that we're bringing to the table, which we think makes us, a little more special than some of the competitive products out there.
Wow. Special shout out to the Corning High School lacrosse team. Yeah, that's a lot going on in Corning, New York these days. That's
Oh yeah,
awesome.
yeah, they're booming,
Yeah,
booming.
that's outstanding. Well, that's great. All right, Adam, we're going to leave it there. I know I'm going to have you back very soon. We'll continue this conversation on the AI side, especially with the ETFs. Everybody, check out AIS and POW. Definitely some nice plays out there for the AI investor. So that's great. Adam, can't wait to talk to you again.
Thank you so much for having me.
Absolutely. So, on behalf of Adam Patti, I am Todd Schoenberger. Thank you once again for joining us on the Money Path. Coming up at 12 o'clock live, we have the debut of Keith's Corner. Definitely want to get a behind the scenes look at portfolio management. He's the guy to talk to. You will not believe the Wall Street stories he has. He's not going to give them all to us today, but we'll hear a couple, I'm sure. So, definitely tune in. 12 o'clock live, right at the top of the hour. Until then, take care.
There's more happening behind the headlines, and you deserve the full story. At Biz Talk Today TV, we break down investing, government moves, entertainment business, and even sports gambling, all in one place. Real conversations, smart insights, content that helps you think smarter and stay ahead. Thousands are tuning in. Don't miss what's next. Subscribe now to Biz Talk Today TV on YouTube and join the conversation shaping the future.